Hi everyone, I'm James Z from Starting Out channel. Have you decided to buy your first stock on trading platforms, or you're starting to invest in Robo Advisors like Scythe? The basic technique is to dollar cost average, so your investments are spaced out, which increases the potential in higher returns. So how can we do it? Please note, I'm not a financial advisor, so my video is purely for your information purposes. Dollar cost average can be done for both robo-advisors and trading platforms. The only difference is you can spend a minimum of $100 for robo-advisors, but you need to buy one stock based on the market price on trading platforms. To buy one Tesla stock, you have to fork out about $680 USD at the time of making this video. Before you invest, I would strongly advise you to have at least 6 months of emergency funds. I'm shocked that some of my friends of my age did not have 3 months of emergency funds, but they are purchasing a lot of branded items. So lesson of the minute, always invest in yourself first before buying Prada bags. Other than branded bags, you can also invest in me by clicking the subscribe button, and it's totally free. Okay, let's go back to reality. You have to do your homework to decide which company you are buying into. Some strong companies are like Tesla, Facebook, Apple, Netflix, and Roku, just to name a few. Now, let me show you some tables about dollar cost average. The first table, I call it kiasi but clever. So over here, all these data are actually faked. It's just for your reference. It doesn't represent any real values. The first one in January, assuming I bought one Apple stock, which is $130. And then in February, I bought another Apple stock, but this time the value dropped to $128. In March, I buy another one, but this time the stock price is at $134. So assuming I bought one stock from January to June, and then if I were to sum up all these values, divide by 6 stocks, that gave me average cost per share at $127. So over here, do take note, there's upward trend and downward trend. For example, there's $130, and then it dropped to $128, and then you go up to $134, then you go down to $128, go down to $124, followed by $120. So there's upward trend and downward trend. The second portfolio is, I call it go big or go home. So again, I want to invest in Apple stock, but this time around, I did not apply any dollar cost average. So I went in January, I just buy all 6 stocks at $130. That cost me about $780. Then again, my average cost per share is $130. So if you were to compare these two, it may look like the difference is only $3. But let's say if you buy in quantities of 10, quantities of 100, you're looking at $30 or $300. So the quantity matters as well. The last table I like to show you guys, I call it FOMO, fear of missing out. Over here, again, January to March, this is not the ideal scenario for you to apply dollar cost average. Why? If you buy in January, there's $130, it's going upward trend, you buy at $135, then the trend is still going up, and then you bought in $137 in March, and again you buy $138, $140, $142. So when it crashes, because stocks, when it goes up, it have to come down. Just wait for that day. So when it goes down, right, your overall average cost per share is going to be even worse than you expected. So for here, my average cost per share is already $137. So let's say if the stock were to drop to $130, the difference will be $7. That means you would have made a loss of $7 if you sold it. So you have to take note of the trend, make sure it's upward, downwards, instead of full bullish, you go upwards and you keep on buying and buying and buying. So you have to pay attention to the trend. Okay, so let me show you a quick example. Today we are going to look at TSM, Taiwan Semiconductor Manufacturing Co. Limited. So recently there's a lot of news stating that there are still demand for chips. That's why the stock price for TSM has been dropping ever since. But again, as long for myself, I just hold and then see how it goes for the next 10 years. But anyway, dollar cost average, back to our main topic. So assuming look at where my cursor is, start off with I can buy it at $116, as you can see over here, $116. Then as it goes along the way, I'm just gonna hold. Then it suddenly drops to $114. So this is when, okay, maybe it's time to dollar cost average. I'll buy another, for example, 5 stocks. And then $140, then oh, it's going up. I'm just gonna hold. It's going up, it's going up. Then again it drops to $140. So over here I may or may not decide to buy because it's the same price. And then it goes up again. So far it's kind of flatlined. Then it start to goes down again about $140.3. And over here I will still be contemplating if I want to buy because it's very close to my previously bought price at $140. Then today or yesterday it dropped to $112. So here I will dollar cost average again. So this is where I'll buy another 5 stocks and then hold, and then right now become $110. Then over here, if you still have the funds, you can continue investing if you believe in TSM. But of course, I have set a limit. For example, I only want to invest max 5,000 in TSM. Then if I used up all 5,000, I'm just gonna stay put because I'm gonna divert my funds towards other growth stocks. Then right now, as you can see over here, is the pre-market is actually going up by just 0.7%. But pre-market are usually not so indicative. Then usually it goes up and then it drops drastically. So it really depends. I can't predict the future, but I hope this explanation can tell you more about dollar cost average and eventually reduce your losses and increases your gains. So guys, share with me in the comments section below if you think dollar cost average works for you. Don't forget to subscribe and like the video because a charity a day keeps the market crash away. And if you are someone who is afraid of taking too much risk, watch my other video on Robo Advisors in Singapore, as you can start investing with only $100 and their risk is much lower than stocks. With that, thank you all for watching, my fellow friends. James Z signing off.